Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this stock market update and industry sector review for the week ending Friday, March 2nd, 2018. It's hard to believe that February has already come and gone. Welcome to March, everybody. I will tell you right now that I do not think that March will be a boring month. The last few days of February were an absolute roller coaster. We had on the, I think the 23rd of February, we had a 300-point up day on the Dow. And then Monday, we had a 400-point up day on the Dow. And then we had down 300 and down 400 back to back. I mean, absolute craziness. So volatility is here in unbelievable ways. So I think the volatility will continue. This is being recorded on the 28th. So the charts that you are about to see will be 6-month charts as of the close on Wednesday, February 28th. Before we get into those charts, though, let's begin with the quote of the week. This week's quote is from Maya Angelou. If you don't know who Maya Angelou is, she was an American poet, singer, memoirist, and civil rights activist. Maya Angelou once said, "If you find it in your heart to care for somebody else, you will have succeeded." Those are wise words from Maya Angelou. All right, let's take a look at the Dow Jones Industrial Average, and then we'll move on from there. Let's begin with the Dow Jones Industrial Average. Let's take a look here. We had that high on January 26th, rapid sell-off. And then we had a nice rally up to February 26th, and then the 27th and 28th were pretty rapid down days. Right now we've got that 5-day moving average in red above the 20-day moving average in blue, but it looks like it's trying to reverse direction and start heading lower. So the first week of March we will see and learn a lot about this Dow Jones Industrial Average. Right now, let's take a quick look and let's draw a support line here, and let's just see how that plays out there. Yep, we've got a slight bit of a problem here with the Dow. If I make that line a little bigger, that is the line of support that the stock market will typically stay above. We bottomed here, bounced off it, and we came down here on the 27th, but on the 28th of February, we broke that rising support line. So it looks like the Dow probably wants to move lower. So regarding the Dow, just be careful. It looks extremely weak, and there's a very good chance that over the first week of March, the Dow will go all the way back down to this February low and test that bottom there, and maybe try to go even lower. We'll just have to wait and see, but that's probably about a 5 or a 6% decline from where we are now to on the 28th of February down to this low from a few weeks ago. Here is the S&P 500 stock index. Same deal. We had a nice low there on February 8th after that big sell-off. Serious rebound that peaked here on February 26th, and then the 27th and the 28th were pretty big sell-offs. Similar to the Dow Jones Industrial Average, if we draw a support line from that low up to touching the 22nd of February, we came down, tested it on the 27th, and then broke that support line on the 28th. So that support is now gone. And as you can see, the 5-day moving average in red has appeared to have topped, and the price in black has already cut below and closed below the 5, the 20, and the 50-day moving averages. So it looks to me, as of the 28th of February, that the S&P may want to go lower and go back down to that February 8th low and test that out, see if it can go lower. So that would be a 5 or a 6% decline. We just need to wait and see if that comes into play. Keep an eye on the social media sites for Christensen Wealth Management, and I can keep you posted regularly with updates. Here's the Nasdaq 100, heavily filled with technology stocks. You can see it's a lot stronger than the Dow and the S&P because this bounce from the 8th of February all the way up to the 26th was a lot stronger. I mean, it got almost up to its all-time high. Here's the 26th of January, all-time high. We got within pennies on the 26th of February. But on the 27th and the 28th, they were pretty significant pullbacks. And right now, not as much weakness yet as the Dow and S&P. We still have the 5-day average in red above the 20, indicating short-term strength, and the 20, which is blue, over the 50-day moving average in purple, indicating intermediate-term strength. So not as much concern here, but the 5-day moving average does look to be topping, similar to the Dow and S&P. So I would still remain cautious, but we just need to see where the first week of March takes us with the Nasdaq 100. Here's the S&P 500 Materials Stock Index. We had that top on the 26th of January, that bottom on the 8th of February, and then a bounce here to February 26th. And then the 27th had a pretty good down day, and then 28th and even a continuation of that down day. We don't have anything indicating strength anymore here on materials. It was a nice bounce for a while, but we now have the 5-day moving average in red below the 20-day moving average in blue, indicating short-term weakness, and the blue 20-day average is below the 50-day average in purple, indicating intermediate-term weakness, and the price of this index is way down here, and it's below the 5, 20, and 50, indicating a lot of no strength at all for materials. So caution in the materials index as of February 28th. Here's the S&P 500 Information Technology Index. It is just that, technology, and the Nasdaq 100 has a lot of technology in it, so it looks very similar. We had that bottom on the 8th of February, big strong bounce. In fact, this is the only index, I think, that got to a new all-time high on February 26th, and then the 27th and 28th were both down days, and we're still hanging in there above the 5-day average in red. And that 5-day moving average in red is still above the 20, and the 20 is still above the 50. So we've got all the moving averages indicating short and intermediate term strength still for the Information Technology Index. Just out of curiosity, let's just draw a support line here and see if it's broken. And yeah, it's broken as of the 28th. That would be it right about there. And you can see that the price here in black has broken this trend line. So we have a little bit of weakness forming in technology. It's just a good idea to keep a close eye on it over the next few days, the first week of March, and see if technology is rolling over to the downside or is getting ready for another move to the upside. We'll just have to wait and see. Here is the S&P 500 Consumer Staples Stock Index, and it is still looking pretty sad. We had that top here on January 26th, the rapid sell-off, bottoming on February 8th. Nice little bounce into the 16th of February. Then it just gave it all away going into February 21st. Then a lower high into February 26th, and then the 27th, and then on the 28th, we made it all the way back down to the same level that it was back on November 7th. So right now, this Consumer Staples Stock Index is looking extremely weak. We have a high, a lower high, and another lower high. And we have a lower low. So right now, everything is looking extremely unattractive. No strength, very weak for consumer staples. Caution is warranted. We've got the 5-day moving average in red, below the 20-day average in blue, and the 20 is below the 50-day moving average in purple, indicating both short-term weakness and intermediate-term weakness. Nothing attractive about staples. Here is the S&P 500 Industrials Stock Index. Had that low on February 8th. Nice bounce here into February 26th, and then the 27th and the 28th. We are now, we've broken, if you draw a line there, we've broken the support, rising support line, so that's gone. The 5-day moving average in red has topped and may be heading lower. And I would just say extreme caution, lots of weakness forming here and lots of indecision as of February 28th. Just be very careful when it comes to S&P 500 and S&P 500 Industrials Stock Index. It looks like it wants to go all the way back down and test that February 8th low, which would probably be a 5% decline. We'll just have to wait and see what that first week of March brings to the Industrials Index. Here is the S&P 500 Utilities Stock Index, and I thought we were going to get a little bit of a bounce here. We'll just have to wait and see. It's trying, but as you can see from November 14th, this top right there, it just gave it all away, bottomed out down here on February 8th, tried to get some momentum here, got up to February 23rd, then there's the 24th, 26th, and the 28th. So it's starting to decline again, and that 5-day average in red is already topped below the 20-day moving average in blue. So that's not very bullish, not any sign of strength there. And like the other charts, if I draw a support line from here to here, you can see that we came down, touched it, bounced off it, touched it again on the 27th of February, and we broke it on the 28th. So even this rising support line isn't providing support anymore. So right now, just be very careful on the utilities. We need to see a recovery. We need to get back above the red and the blue, the 5 and the 20-day moving averages, and try to push higher on this thing to for it to even have any chances of being an attractive industry. Here is the S&P 500 Consumer Discretionary Stock Index. We had that bottom on the 8th of February. Nice bounce here into February 26th. Nice big decline on the 27th, and then a follow-through decline on the 28th. I don't need to draw that line. If you drew a support line from here to here and up and away, we've broken below that support line. So now it leaves the door open to possible further decline. The 5-day average here in red has appeared to have topped, is about ready to cross below the 20-day average. So we're probably going to have some short and intermediate term, or I should say short-term weakness, and lots of indecision coming ahead on this discretionary. I don't see a whole lot of strength. Here's the Dow Jones Financial Stock Index. Had that bottom on the 8th of February. Nice bounce here into February 26th, and then the 27th and 28th. We made some pretty significant down legs. Like the other charts, I draw a support line in there, touching the low of the 22nd and the low of the 8th. You can see that on the 28th of February, we broke that rising support line, which leaves potentially some room for more downside. We may be headed back down to the lows of February 8th. We have a topping 5-day moving average, indicating some upcoming potential short-term weakness. And you can see that blue line and that purple line, the 20-day moving average and the 50-day moving average, have been moving sideways almost in parallel since February 13th, indicating significant intermediate term indecision. And since they're moving parallel, there's no sign of strength and no sign of weakness in the 20 and 50-day moving average time frame. So we just have a lot of sideways action on the financials. So just be careful. For the last few days, we're heading lower, and we broke that support line. So just a little bit of caution should be used on the financials. Here's the Dow Jones Oil and Gas Stock Index. We had that nice run up in December and January. We had a peak there on January 22nd. Rapid sell-off, gave it all away back into February 9th, going back to the levels not seen since September. Then we had a little jump into February 14th, gave it all away on February 21st, tried to get higher on February 26th, and then the 27th and 28th took us right back down to where we were on February 8th. So right now, the energy and oil and gas index is just sitting right down here at the bottom. We need to keep a very close eye on that because the price in black is below the 5-day average, the 20, and the 50. That's not strong at all. And that 5-day average in red is below the 20, and the blue 20-day average is below the purple 50. And so we have short-term weakness and intermediate-term weakness, and the price is below all three. So nothing attractive yet on the Dow Jones Oil and Gas Energy Index. So we just need to keep a very close eye on that and be very careful. And we'll see where March takes us. Here is the Dow Jones Healthcare Stock Index. We had that nice run-up that started on December 29th, ended on January 26th, gave it all away and bottomed out down here on February 8th, and we struggled to get back up to here on February 26th. So we made it about halfway back to that high on January 26th, but then we had the 27th and the 28th that really took away a lot of the momentum. And if you draw a support line from that low to the low of the 22nd, you will see here that on the 28th of February, we broke that rising trend line, and now it leaves the door open for potential further decline back down to this February 8th low. So we have the 5-day average in red has topped and appears to be headed lower. So I would say we have short-term, well, we do have confirmed short-term weakness, and probably intermediate-term weakness is only a few days away. And I would just be very careful with this healthcare stock index here. Here is the Dow Jones Real Estate Stock Index. It still cannot get out of its own way. Still a lot of difficulty trying to get into an uptrend. We've had that high here on November 13th, and then a test of that high on December 18th. Gave it all away, and then bottomed out on February 8th of 2018. Bounced into February 16th, and bounced again onto February 26th, and then the 27th and the 28th just kind of continued to give it away again. So really having a hard time getting going, and this 5-day moving average is not making a very good attempt at crossing above that blue 20-day moving average. So we technically still have short-term weakness and intermediate-term weakness on real estate. The real estate stock index, the price in black is below all three of these moving averages, 5, 20, and 50. So we just need to wait and see. We don't have anything showing us any strength yet. We'll have to wait and see what the first week of March brings. Here's the Dow Jones Transportation Stock Index that I recently have added to the mix. This is railroads, airlines, things like that. I think it's a very important sector of the economy, so I thought I'd put it in. We had tops here on the 12th of January and the 22nd of January. That nice big slide, sell-off bottoming out on the 9th of February. Then the bounce ending on the 26th of February. 27th was halfway down here, and then the 28th finished up down here. So as of the 28th of February, we are below the 5, the 20, and the 50. So on a very short-term time frame, that's not very attractive. That's very weak. Then you've got the 5-day average in red below the 20 in blue. That's short-term weakness. And then the blue 20-day average is below the purple 50, giving us intermediate-term weakness too. So nothing good or optimistic yet, and certainly not right now, about the Dow Jones Transportation Index. Looking pretty weak. And if I draw that support line in to see if it's broken it, we had a bottom on the 9th, bounce on the 15th, came back down, hit that support line on the 20th of February, touched it again on the 21st, tried to get off the ground here again on the 26th of February, and then the 27th and the 28th just broke right through that support line. That's not a very good sign. Probably this transportation index is going to go back down to this February 9th low. We just need to wait and see. But right now, a lot of weakness in the transportation stock index. I would like to revisit this US dollar index. There's been some interesting developments here, some price action that's worth noting. We had a bottom here on the dollar index back on February 1st. It bounced up to here, came back down and tested that low on February 15th, and then we took off again and we got up to here. Right there is February 28th. So the interesting thing that I have here is, yes, we do have short-term strength. We've got the red line crossing above the 20-day moving average in blue. So we got short-term strength. We still have intermediate-term weakness. But the thing that I find interesting that I looked at today is if I zoom out on this chart quite a ways, a few years, and that would take me back to 2015. If I draw a line from this bottom here over to where we are today, let me double check that here. Oh, there we go. It's actually this one. So if we draw a line from the lows of May 2015 to the lows of May 2016 to the low of September 2017, we broke that line. That line was classified as support for all that time. We broke it in January of 2018, taking us down here. We bounced, and right now on the 28th of February 2018, we're sitting right there. So the interesting thing for me as a financial advisor is going to be to watch this and see if in the first week of March, the dollar index, which is a basket of currencies, you can find the information on that dollar index in the conclusion of this video. I've got a slide with the actual breakdown. If this dollar index can break above that 2+ year line, that could mean a rally in the dollar, and that would change some sectors. But right now, if it can't get above that line that goes all the way back to May of 2015, that could open the door for the dollar. If it gets stopped here at this line, it could open the door for the dollar to go back down to those 2014 lows, way back down there. That would be interesting. So I'll leave it at that. I just wanted to point that out because as Americans, we all have dollars because that is our currency, and it's also the world's reserve currency for the time being. Thanks again for watching this market update. I hope you found the charts and information useful. These are, in fact, some very delicate times. As you saw from those charts, we have a lot of weakness, with the exception of the Nasdaq 100 and the technology stock index. Everything else looks pretty weak, has appeared to maybe have peaked out here and rolling over back to the downside. So I want you to use extreme caution and just pay attention and keep an eye on this YouTube channel and my social media pages. So one, click the subscribe icon on this YouTube channel, then click the little bell next to it so you'll be notified whenever I post additional videos. And then go to Facebook, LinkedIn, or Twitter and look up Christensen Wealth Management and like or follow the CWM pages there. Have a great day, and I look forward to talking to you soon. Bye-bye.